Hello dear traders, my name is Tim and these are the main trading ideas for current trading session. First of all, let's discuss the situation with USD Japanese yen. The dollar strengthened against the Japanese yen on Wednesday after the US Federal Reserve delivered another rate hike to contain inflation. At the end of its two-day meeting, the Fed lifted its policy rate by 75 basis points for the third time to 3.25%. Most market participants had expected such an increase, with only a 2% chance of a 100 basis point rate hike. The American regulator repeats that it will continue to tighten monetary policy to control inflation. In addition, he admitted for the first time that the key interest rate could exceed 4%. Given the above, the growth of the pair may continue. Strong resistance can be seen at 145 psychological level and upside break can rise towards 146. Next, USD Canadian dollar. The Canadian dollar slumped to a two-year low against US dollar on Wednesday before pairing its decline, as investors await the Federal Reserve's plans to continue raising interest rates to tackle inflation. The US dollar extended recent gains against a basket of major currencies as the Fed raised its target interest rate by the 0.75 of a percentage point to 3.25%. The price of oil, one of Canada's major exports, settled 1% low at $83 a barrel. Additional pressure on oil was exerted by the growth of oil reserves in the United States, as well as concerns about the prospects for global economic growth against the backdrop of reduced supply. Immediate resistance can be seen at 1.3550 and upside break and rise towards 1.3650. And finally, GBP USD. The pound touched a new 37-year low against the dollar on Wednesday after the US Federal Reserve hiked interest rates. Federal Reserve Chair Jerome Powell vowed that he and his fellow policymakers would keep at their battle to beat down inflation. Today, the focus of traders is the meeting of the Bank of England, which may raise the rate to 2.25%. Market participants believe that the tightening of the national monetary policy may provoke an additional decline in the British currency. This is because high interest rates can worsen economic conditions and cause a recession. Immediate support is seen at 1.12. A break below could take the pair towards 1.11. So these are the main trading ideas for now. Thank you for your attention and don't forget to subscribe to our YouTube channel.